Hi, everyone. Welcome to today's webinar on financial modeling best practices. I'm Ian Schnoor, and I'm thrilled that you're here, and I'm really looking forward to leading this webinar for you here today. So before we get started, I'm going to share my screen in a second, and we're going to do some intros and then jump right into today's topics. I'd love to hear and know where you're joining us from. Where are you coming from? You're welcome to go into a box and enter where you're coming from. We have had people attending our webinars from literally all over the world and would love to know where you are joining us from here today. So go ahead if you have a second and type it in. It's helpful for us as we know where people are exactly coming from. So on that note, and again, I said my name is Ian, let me go ahead and share my screen and then dive right into today's webinar. I've got a lot of material to cover, so we're going to move through things very, very quickly. So I'm going to go ahead here and share my screen. So hopefully you're seeing my screen now on the slides that says Financial Modeling Best Practices. So here's what we're going to do. Today's webinar is going to be just over an hour. Again, on some of my favorite top 10 tips and skills to build a world-class financial model. What we're going to do is I'm going to start with around 5 minutes of introductions. I'm going to tell you a little bit more about who I am and my background and why I'm here. And I'm going to spend a minute telling you what we're doing at the Financial Modeling Institute, the FMI, so that you know what it's about and what our mandate and the purpose is. And then you're welcome to follow us. That'll take just a few minutes, and then we will spend most of the webinar on today's topic, financial modeling best practices. I've got a whole bunch of tips and skills to share with you here today. By the way, hopefully you'll be able to stick with us for the entire webinar. Once you get to the end, you'll have a chance to receive by email, you'll have a chance to receive all the materials that I'm going to be sharing with you today. So all of the files that I'm going to be reviewing, I've got these presentation slides. I've got an Excel keyboard shortcut sheet that I would love for you to have, along with a copy of a financial model. I have a financial model here that I will be reviewing and presenting to you. So you'll be receiving that in addition to my notes file. I'm going to be taking some notes. All that will come to you at the end of the webinar. So hopefully you'll be able to stick around and join us for the entire time here today. The last thing I will mention is this. Please feel free to put in questions into the chat. We always love to hear from you. If you have questions on something I'm saying or something I didn't say, something about modeling, go ahead into the chat and please enter it in. We'll try to get back to you during the webinar, but if there's a lot of questions and we're not able to, then we'll get back to you as soon as we can shortly after the webinar. So let's jump in here. Again, I'm going to spend a few minutes on introductions before I dive in. So as I mentioned, my name is Ian Schnoor. I'm the executive director of the Financial Modeling Institute. My background is that I started my career many years ago in banking as an investment banker. Actually, I worked for a number of years at a bank called BMO, and then I spent a couple of years at Citibank doing traditional M&A type work, financing work for companies. I was always very passionate about models and modeling and pushing the envelope to make sure that models were truly professional, best in class, beautiful, organized. And I have been teaching modeling for many, many, many years as well. And around in 2017, a bunch of modelers from around the world got together, and we realized that there was no way for people to validate their modeling skills. There was no rigorous exam to prove that people had strong financial modeling skills. So we went out to create an organization that would be just that, an accreditation body to validate people's modeling skills. And we went out to create the Financial Modeling Institute. I'm going to show you here a slide. So there's a bunch of slides. There's a bunch of slides in the presentation on the FMI and what we're doing and our mandate. And you can go check out our website at fminstitute.com. Think of us like any other accreditation body, like the CFA Institute or any accounting institute. We are working to build a community of financial modelers around the world. And we're doing that through the umbrella of very rigorous, challenging modeling accreditations. Our level 1 exam is called the AFM, the Advanced Financial Modeler Exam. It is a 4-hour exam. It is not multiple choice. The whole premise of the AFM exam is we give you a case study and 4 hours and basically a blank spreadsheet, and we ask you to build up a model from scratch in under 4 hours. And if you can do that, then we are confident that you have excellent financial modeling skills, and we will designate you with the AFM accreditation. If you want to learn more about this or other accreditations, check out our website. You can block off time with one of our team members to speak and learn a little bit more if you're interested. I'm excited to report that the former CEO of the CFA Institute, a gentleman named Paul Smith, has joined our team as an advisor, as a board member, and he's being very active. When he was heading up the CFA Institute globally, he recognized that there was a huge demand for accreditation in the field of modeling, true accreditation along the lines of what we're doing. And so I'm excited that he is on our team helping to promote and share our message globally. And so that's a little bit about who we are at the FMI and what we're trying to do. And as part of our effort to create awareness, we have put together a learning series, a free webinar series. And today we're going through topic 1 on financial modeling best practices. I'm going to share 10 tips to build a world-class financial model. And that'll be today's topic. There are other topics that we have been doing as well. Powerful tips to check and audit financial models. We have webinar on scenarios and sensitivities, on circularity. If you have a topic that you would like us to cover, feel free to go ahead and share it. And we might put together a webinar on that one as well. We're always looking to kind of build and create more content for our community. So again, that's a little bit about who we are and what we are doing here at the FMI. Hopefully you all will consider joining us and looking to validate your skills. The question I have is, has anyone, and maybe you can just let me know if you've ever seen this, has anybody here ever seen a job posting? Have you ever seen a job posting that said something like, we're looking for either accountants or MBAs or a CFA, but we also want people who have proven financial modeling skills, right? We want people with strong modeling skills. Just raise your hand. Has anyone ever seen a job posting that specifically said, we want people with strong modeling skills? Yeah, I have. I've seen lots of those, but that's pretty new. Did you know that? Only the last 5 or 7 years, companies have been saying, we want people with strong modeling skills. And previously, there was no way to prove that you had exceptional, strong modeling skills. And hence, that's what we're doing here through the FMI. So let's jump in. Previously, our exams were all in person. We had testing centers all over the world, but because of COVID, we've moved all of our exams to virtual. So the exams are now online, but they're still very much proctored and reviewed. They're proctored, they're controlled in a very, very controlled environment. And you're still building up a model from scratch at your own computer. It's all being recorded so that we can monitor exactly what's going on. So let's now dive into and spend, the next hour, just over an hour, dealing with some of my favorite tips and skills regarding financial models. And it's going to start by saying that financial modeling is a discipline. Modeling is so much more than just a couple of skills. It's its own discipline. And people often don't always realize that and don't always appreciate that. So let's jump in here. And I want to talk about for a second. There's a slide on page 10. And again, if you stick around till the end, and you're going to receive all of these files, but there's a slide here that says, what is a financial model? I'm actually going to go to my Excel file where I'm going to be keeping some notes here. And you're going to receive this file as well at the end of the webinar. What is a financial model? And pardon any typos. I'm going to do my best to keep it clean. I ask this question all the time. I'm always very curious to know what people think. By the way, as a reminder, again, my name is at the top here, my email address. And if you missed it, there's another link here to get our Excel keyboard shortcut sheet. If you click on this link, you can access it that way as well. But let's come back to our question. The question was, what is a financial model? And in most people's mindset, lingo, what we are referring to is simply a forecast. All we are doing is building a forecast for a company or a project, some sort of an organization. All we're doing is building a forecast into the future. Now, how far in the future are we typically forecast? I'll say we're typically forecasting 5 to 10 years, 5 to 10 years. That's common, but some models are shorter, some models are longer, but that's it. That's all we're trying to do is build a forecast, often of a company's financial statements, the income statement, cash flow statement, balance sheet, into the future. So then the question is why? Why are we forecasting? And I will tell you, it is because models have become the most important decision-making tool. I'm going to spell that. Models have become the most important decision-making tool in finance, in all of accounting and business. Models have become the #1 most important decision-making tool that we have. And so it's critical that we know how to do this really well and really effectively. So what types of decisions? What types of decisions are people making off their models? There's lots of decisions are coming off the backs of our models. We're making a lot of decisions around valuation or investment decision. Should we acquire the other company? How much should we pay to buy a company? Should we invest in an asset, in an opportunity? People are making what's called go and no-go decisions. Should we invest in a project? Should we invest in a new opportunity? Some people build models to make credit decisions or capital structure decisions, LBO, leverage buyout decisions, credit decisions. We build models for planning and budgeting purposes. So anyone who's involved in budgeting or planning is involved in forecasting and building models. And finally, I'll say, again, if we're looking to do mergers and acquisitions or looking at an opportunity, we will need models around that as well. So there are so many reasons, so many needs that people need strong models. Every major type of decision we make today is based on a model. As I mentioned, it all sounds simple. It all sounds simple, right? I said all we're trying to do is take a company's historical financial statements and forecast it into the future. It sounds really easy, very simple, but there's a problem. There's a problem. And that's why we're here. That's why we exist as the FMI. And that's why we're here today with today's webinar. The problem is that most financial models that exist in the world are a mess. Most models are a mess. In fact, many are a disaster. Many financial models are a disaster. They don't work well. They make it very difficult to work with, to use, and they make it really hard for you to make optimal financial decisions. Has anyone here ever struggled with a model? Have you ever looked at a spreadsheet, a model that was built? You opened it up and thought, oh, my God, I will never be able to understand this Excel file. It's crazy. Have you ever seen a formula that was so long that it wrapped around and around and around, and you got a headache just looking at it? That's not optimal. We can't do that. That invalidates our models, makes it very difficult to use them. So what we're going to talk about are some tips today to share with you. How do you build models that don't do that, that are optimal, that are beautiful, that work well and allow you to make good decisions? Well, what I like to say is that a good model needs to work, I'll put it this way, a good model, first of all, needs to work in two ways. So how do you know if a good financial model, how do you know if a model is a strong financial model? Well, as a high level criteria, a model has to work in two different ways. Number one, it needs to work electronically. And what that means is that every formula, let me spell it, every formula must make sense in Excel, right? Excel is typically the tool that we are using for modeling. So every formula must make sense. So if I built a model, let's imagine I built a model and I emailed it to you, and you opened it up and you started playing with it. you should feel like every single formula makes sense. You could say, yeah, I understand what Ian's doing. I can follow along. I can understand what Ian's done and how it works. I understand every single cell. It's clear. It's logical. It makes sense. And that's critical. It does not happen all the time, but it's so important and so critical. And number two, I will say that even in today's day and age, a good model has to work well on paper or as a PDF. It has to be a tool that you can present to someone as an electronic tool, as a PDF file, or on paper, because the reality is the vast majority of decision makers today are still making a decision by looking at something on a PDF or on paper. Senior people are not usually clicking through the Excel file and playing with it in order to make their decision. What I'm really saying here is that a good model must be a powerful communication tool. It's got to be a powerful communication tool. It needs to tell a story. It has to tell the story of your opportunity, your company, your project, so that we can get intelligent and make optimal financial decisions. So on the backs of that, now let's dive in and talk about how do we do that? Well, I have a page here, page number 10. First of all, financial modeling is a very multidisciplinary skill. If you want to be a good modeler, you need a lot of different skills. You have to be strong at Excel. That's our tool. You have to understand design and how to properly design and organize all the pieces of a model. We need to have strong accounting skills and strong finance skills so that we can pull the whole thing together into one clean, organized tool. As I mentioned already, a good model has to be a powerful communication tool so we can use it for decision making. It has to adhere to all of these attributes. You can take a look at these on your own and think about what they mean, but a model has to be dynamic. It's got to be flexible and intuitive, printable, transparent. It's got to be transferable so you can send it to a client or your boss and people can understand it. When a model does that, it achieves tremendous credibility and it inspires confidence. And that's what we're trying to do. So let's now get into the goals of any model. And I'm going to start with the one little tip here that says simplicity is the ultimate sophistication. We need to keep things simple. Keep it simple. Keep our design simple. Keep our flow. Keep the logic simple. Keep the Excel simple. Now, we're not going to keep the ideas. The ideas need to be as complex as they need to be, but the design, the flow, the logic has to be understandable, clear, and simple. We also have to avoid this problem. This is one of the biggest problems people ever have in their models. We must never hard code. We can't ever type a dead number into a formula like this. Do you see this formula? Has anyone ever seen a formula that looks like this? Look what I have. It says equals A5 multiplied by 0.025 plus 4.9. Have you ever seen a formula in a spreadsheet that looks like that? What does the 4.9 mean? I have no idea. Recently, somebody tried to explain it to me. I said, you don't know what that 4.9 means. It's a dead number. It's a hard code. Well, actually, I do know what it means. It means that it was late at night and the model builder was told that they have to make an adjustment. So they did it right in a formula, which means nobody ever knows what it means, what it is, or how to change it. So we can't ever do that. So we want to adhere to some of these key basics, and you can see these on the slide to make sure your models are clear. But let's now dive into modeling best practices. This is why we're here today. Let me share with you my 10 top favorite tips, and they're all here on they're all here at the bottom of this slide, and you will see it here in the presentation. It is page 14, okay, of the slides here. And they also will live in my tab here that says modeling best practices. In my notes file, you will see them here as well. So the very first one says, and you'll see it, let me jump back. It says you need to plan and design a model. I will tell you, model planning is critical. It is absolutely critical to build a plan. We often call it a scoping document. And it is so important. I will put a note here. It is so important to properly plan and design your model. It only takes 30 minutes or so, maybe 60 minutes. But if you properly plan the model, it will allow you to build it very effectively in a very clean, organized way. So investing in the plan is so critical. And I will tell you that there are 3 steps we like to follow. I like to recommend 3 steps for model planning, and you will see them here on the next slide. On the next slide here, it says the planning process, and it says it is critical to properly plan and model, design a model before it can be built. And often whenever a model is a mess, it's because someone did not properly plan it. So here's what I would encourage you to do to create a strong plan. Follow these 3 steps. And it says, step number 1 says, identify the major issues. Let me jot this down. This is going to be step number 1 is the major issues, often called the key drivers. Identify the major issues, the key drivers. What is this? Well, these are the most important assumptions in the model. These are the most important assumptions in the model. Why are they the most important assumptions? Because they are hard to forecast. They are hard to forecast, and they are hard for management to control. Okay, they're hard to forecast, they are hard to control, but they can have a big, big impact on the success or failure of the business. Example, if you are modeling an oil and gas company, the price of their commodities, so prices, right? So commodity prices like oil, gold, oil or gold, or other sorts of commodities, natural gas, any sort of commodities, chemicals, whatever it is, you get the idea. Some food products. You might not know exactly what your prices are going to be that you sell your product for, because some companies have a lot of volatility in their selling price, particularly if they are commodities. And that can be a huge impact on the variability of the company's revenues, of their earnings. So we're going to do something very special with these variables, but your job is to identify what are the most critical issues. Other examples can be things like inflation or interest rates, exchange rates, FX rates. These are variables that can all have a big impact on the success or failure of the company, but they can be tough to forecast. So in our planning process, we are going to identify what they are. So let's start by doing that. Whenever you build a model plan, start by thinking about what are the major issues, the most critical ones. The second thing I would say is to make a list of all the assumptions. Step 2 is to make often a big list of all the other inputs and assumptions you need in the model. What are some of the other critical inputs and assumptions that you need? And you can see here on my slide, step number 2 says identify all the assumptions that need to be made in the model. And I would say do this by category. So think about all the types of assumptions that you need. So as an example, what are the different revenue assumptions that we need to build the revenue forecast? Things like prices, volumes, how is that going to work? Let's think about the various costs at the company. What kinds of costs does a company have? Well, they have manufacturing costs. They might have raw material inputs. They might have marketing costs. They might have energy. They might have people costs, labor. Think about all of the various types of costs. Understand them. What else? What other types of assumptions will a company have? Companies have assumptions around their fixed. I need to make assumptions about their fixed assets, their depreciation, their capital expenditures. I need to make assumptions around their working capital issues, things like accounts receivable, inventories, payables, income taxes, their debt, their equity. I need to make assumptions about all of these categories. What's the interest rate on their pieces of debt? What sorts of dividends do they pay on their equity? Ask lots of questions. And that's a key thing here. I'll put a note that says, ask lots of questions. You know what? It's not the model builders. It's not the model builders' job to make up all the numbers, right? It's not your job to figure out all the different assumptions. You need to do research. You need to talk to your team, talk to your boss, your client, your boss, talk to people, ask them, what are we going to use for the marketing cost? What are we going to use for the natural gas cost? And you're going to collect and pull it all together into a big list. So critical, so important to understand. And by the way, I will put a note here. This allows you to have consistency in the level of detail. You know, one of the biggest problems in models is that they're not consistent. One section of a financial model will be very detailed and another section will be very, very summary, very high level. This allows us to be consistent in the way we think about our data. And then the final step of the planning stage is to plan what the model will look like on paper. Plan what the model will look like. It says identify the required schedules and components. What will the model look like on paper, right? Think about all schedules and components needed and in the correct order. The presentation of a model is so critical, right? I'm going to say here, pretend the model will be a presentation. Has anyone here built a presentation in PowerPoint recently? When was the last time you built a PowerPoint presentation? I'm going to guess that when you built a PowerPoint presentation, that the first thing you did is you made a table of contents. Just like in a presentation, make a table of contents or set the agenda, right? I'm going to say we storyboard it, plan the story. What are you going to have on each page so that you can talk about it? And so again, those are the first two tips in terms of building an optimal model. Planning and designing a model is absolutely critical. And as part of this, ask the right questions. It's one of my favorite things when building a model is asking good questions, tough questions. I've probably built over 100 models in my career, and I love getting up at the beginning, asking lots of questions so that we can really understand how the company works and how the model is supposed to work. Let's get into the next couple tips here now. The next one says keep the assumptions up front. But before I get there, what I want to do is talk about optimal model flow. The next part of the webinar, I'm going to talk about optimal model flow. It builds off this one. In point 3 of the plan, I told you to think about an optimal order. How do you want to present the model to your boss, to your team, to your clients? So let's spend a few minutes talking about optimal model flow. To do that, I'm going to show you the financial model. By the way, this is my slides. I'm back in my PDF files. Here's an Excel keyboard shortcut sheet, and this is the FMI's keyboard shortcut sheet. This is going to get sent to you at the end of the webinar. So you'll have it. There's a version for PC and there's a version for Mac. But what I want to do now is show you a model. And instead of showing it to you in Excel, I will show it to you in Excel, but I want to first show this model to you as a PDF. I want to show it to you what it looks like on paper. Imagine you printed it on paper, and I'm going to make it larger here. Take a look here at what I'm showing you. This is the Henderson model. And first of all, you will see here, let me go back out, that this model is 15 pages long, 1.5. That's sort of an average size. Some models are a lot longer, some models are shorter, but this is an average normal size. And it's the model I'm going to show you. This is one of the sample models that we use at the FMI for a manufacturing company called Henderson. This will be sent to you also at the end of the webinar. So stay tuned for that once you get to the end. And so let's take a look at these 15 pages. Well, the very, very first page, look, is just a simple cover page. Very simple. I've got a simple cover page. Very first thing you see. The next thing I have here, I'll zoom in, is a very simple executive summary. It says summary outputs. I'm going to talk about that as well. So the next page here it's page 2. You can see page 2 is my executive summary. And I'm going to talk about this page more. Now, I want to go through this very quickly. So I have a cover, I have an executive summary. Watch this. I've got some pages of assumptions. I'm going to move very quickly. I have some assumptions pages. After my assumptions, there is a page of scenarios. You can see there's a scenario page that we'll talk about. And then as I move on, take a look. There's a revenue schedule. Do you see where I'm moving? There's a revenue schedule. And then there's a cost schedule. After that is my income statement, the income statement for the company. I'm deliberately going very quickly because I just want you to get a sense for what this model looks and feels like at a high level. So look, there's an income statement, no surprise, a cash flow statement, and then a balance sheet. This is already page 10. And then we get into some schedules, like a depreciation schedule. You're going to see all of this when you get the files. But as I go through, very quickly, as I go up and down very, very quickly, just focus on the whole page. What I want you to realize and think about is that for a lot of clients or a lot of people who see this, they will start to feel very comfortable. What I want you to get a sense from a very high level, I hope you feel that the model feels organized. I hope you feel when you look at this that the model seems logical. I hope you think that it seems like it's presented and formatted nicely. Take a look. Did you notice as I was flipping, I'm going to go from page to page quickly. Do you notice as I flip that there's a title on the top of every page, that there's a footer, that there are page numbers? Did you notice that the font is the same size? I'm using the same font and it's the same size font on every page. There is a bit of spacing. There's the same amount of space on the left, the right. The point is, for a lot of people, this starts to feel like a presentation. It's legible. Look, it's legible. It's readable. If you were to print it out, the numbers you can actually read. It feels like a bit of a presentation, and that's so important. That creates tremendous confidence right up front. So let me share with you now some suggestions on optimal model flow as we continue on here. So number one, what I would strongly encourage you to do is to have a cover page in your models. And I will say to you that most models do not have this. It's a cover page. This literally takes 5 minutes to do. It's really simple to build a cover page. And what should you do? Include things. What should you put on the cover page? Whatever you want. Include things like your name, whatever you think is important. Your name, the company name, maybe the logo. You could include some dates. Very effective, very simple. But what it does is it makes it feel like a financial presentation. It makes the whole thing feel like a financial presentation. It's not just a bunch of messy numbers. Now, by the way, if you're going to put dates in the model, if you're going to include dates, a date can be static, which means it never changes, or dynamic. If you're going to include a date in a spreadsheet, you can make one static or dynamic. A static, let's go to last year. Let's go into last year. Let's go to December. I could put in a date, a dead date. Let's go to a date from last year, December 20th from 2021. If I do that, then it will type a date directly into the cell. But now you see this date is dead. It will never change. Now, there's also a keyboard shortcut. The keyboard shortcut is Control and the semicolon. Try that on a PC. If you were to go and type in to a cell, Control and the semicolon, it should put in a date. So that should put in a date into the cell as a dead input. It will never change. But you could also have a date. You might want to put in a date that's dynamic. And if you're going to use a date that will change every day, there are two ways to do that in Excel. You can either use a function called equals today. You've probably seen this one, equals today, or another feature called equals now. These are the only two functions in Excel. These are the only two functions and features in Excel that will show you the date in a dynamic way that changes every day by itself. The today function just shows you today's date, whereas the now function also includes time. It will show you the date and the time. Again, the point is a very simple cover page sets the stage, sets the tone, and it makes people feel very comfortable about where we are going to go. The second thing that I would strongly encourage you to do when it comes to optimal model flow is to do this, is to always include an executive summary. Always include an executive summary. Again, I will say most models do not have this. Why is it so important to have an executive summary? Because here's my promise. I promise you, the very first thing your boss or client wants to know when you show a model to your boss or your client, the first thing that they always want to know is, what's the answer? What is the answer? They want to know what's the answer. So it's important to summarize it up front. Now, I will tell you that this is the last page to build, but the first thing to present. You can't build this page until the very, very end, but it's the first thing you need to show people because they want to know what's the answer. Now, I will tell you that this page must be customized. This page must be customized for your boss, for your deal, for your client, for your situation. Let's take a look for a second at my executive summary. You know, sometimes people will see the executive summary in this Henderson model and they'll say to me, that's boring. And I'll say, you're right, this is a boring page. But you know why it looks like this? Because this is what my client wanted. My client wanted an executive summary page that showed them some simple things like revenue with revenue growth, EBITDA with margins and growth rates, and some net income. That's it. That's what this client wanted to see in a little table. So I have a 5-year forecast for this client, and I'm doing it in a base case, I'm doing it in a best case, and I'm showing them in the worst case. But I planned it out. I asked questions. So I knew what the client wanted to see, and we summarized it right up front. But as I said, this must be customized. You could, if your client wants this, you could include graphs, charts, tables, other visuals, whatever you want. But make sure that this is what your client, your team wants. You could make a dashboard. Whatever you think would be helpful to your reader is what you should include up front. So powerful, so important. So as I said here, the second thing is the executive summary. So if a client's reading the model, the first thing that they can see is what's the answer. Now, the next thing I want to show you in the model here, and it's on page number 3, right? On page number 3 and page number 4, page 3 and page 4 is all of the inputs and assumptions. Let's go to here a second. And I will say here that the third thing that you want to do here is include the assumptions, the inputs. I will say not most, but many models do not have an assumption page. Has anybody ever seen, have you ever seen a financial model that did not have an assumption page? Well, if you did, where are the assumptions? Many models do not have this. If a model does not have an assumptions page, the assumptions are, where are they? They are scattered everywhere. They're scattered everywhere throughout the model. Let's take a look here, by the way, at the actual model, guys. Let's look at the actual Excel model. So here it is in Excel. You'll get this again at the end. There's a cover sheet. Here's my cover. Here's my executive summary. There it is on its own sheet. And then this is the assumption tab right up front here. All of the assumptions have been built vertically on this one sheet. Many models do not have this. And if you don't have this, where do the assumptions live? Well, they're scattered everywhere. All throughout the model, people will have formulas and they will have inputs scattered all over the place. We'll come back and look at this more carefully in a few minutes. Has anyone ever seen that? Have you ever seen a situation where the assumptions are scattered everywhere? You probably have. What's the problem with that? The problem with scattered assumptions is it's hard, very hard to read the model and hard to change the model because you don't know where to go. You're not sure where to go to make changes. It's hard to read it. It's hard to present it. So why do we show the assumptions next? Why is this the next thing I want to show in the model? Because I promise you, here's my promise. Here is my promise to you. After you show your client the executive summary, the next thing they always want to know, as soon as you show your client the answer, the executive summary, I promise you, the next thing that they want to know is, how did you get there? How did you get there? Let me write it here. How did you get there? That's what they want to know next. Okay. Show me the answer, then tell me, how did you get there? So that's why at tip number 3, it says keep the assumptions up front. By the way, we also encourage you to make them blue. One key critical modeling convention is that in models, calculations are typically black and input cells are typically blue. We will make the font blue. So anytime we have a blue number, that means it's a data input. Why? Let's go take a look at the model here. We can see on my assumption page, I can see all these blue numbers mean they're inputs. All these blue numbers were data inputs by the user, and you can see them here. Why? Even on the model sheet, even let's say on my income statement, if I look at my income statement, all of my historical data items here. Oops, I forgot to update this. Let me just roll it forward for a second. Change it to the first year is 2022. It was all updated. Let me change that. So why is that? Because the historical data is dead. The historical data is just inputs. These historical numbers are never going to change. They are blue as well. And the issue is it's very easy to read. It's easy to follow. It's easy to read. It's easy to understand and make changes if you know which cells are the input cells. And the input cells are the ones that are blue. Very, very simple. So I strongly encourage you to do this. And I will tell you, it is very easy to build an assumptions page if you first made a plan. If you properly plan the model, let's go back up in our notes. If you've properly built a nice plan and you've thought about all the assumptions and you asked lots of questions, it's very, very easy to take all the data and enter it into the assumption page. Very simple, very easy if you first made a plan. But what I want to share, I'm going to share with you a really excellent keyboard shortcut now. I want to show you a really great tip. I will tell you that some people don't like their assumptions up front. Yes, believe it or not, there are some people that like to have their assumptions scattered everywhere. And here's why. And I'm going to show you a really great skill in Excel to manage this and deal with this. Watch this. So what I'm going to show you now here is this. A lot of people will say, they'll say to me, Ian, the problem with having all of my assumptions up front, you see my assumption tab? They'll say to me, the problem with this is that it's very difficult to see what the impact is. So as an example, let's see the raw materials are 226. Do you see that? What if I was told that the raw material cost is going to change and it's now going to be, let's say, 250? If I make the raw material cost 250, good, I did that. Do you see that? But so what? What did that do to earnings, to EBITDA? What did that do to my cash flow? I don't know. I don't know because I have to go back to another sheet. Look, I'm going to go to my model sheet here. I need to go to the model sheet. And on the model sheet, there's a revenue page and then a cost. And I'm going to go down to the income statement. Okay. People will say, well, now I have to go to another sheet, the model sheet, and I can see what did that do to EBITDA and what did that do to net income. I always have to jump back and forth. Let's go back again. So let's see this. The EBITDA right now is 73 million and then 47 and then 86. Let's go back. Let's go to the assumptions and change the raw material to be 250. If I do that, I have to go back again. Now I'm going to go back to the model sheet and I can say, what did that do to EBITDA? Well, the EBITDA dropped 65, 37, 76. My point is, some people will say, Ian, every time I change an assumption, I need to jump back and forth to see what is that doing to the forecast. What's that doing to the EBITDA? And I get that. I get that. That makes sense. When you make a change in your assumptions, it's really nice to see right away how to manage that. Well, one way to do that, one way to see the answers is very simple, is just to build an output box right on. What if I did this? What if I put an outputs box directly on my assumption page? Take a look at here. Imagine that I had my first year of the model. I'm just going to build this very quickly, and then had the next 2 years, 2023, 2024. And imagine that I did EBITDA and net income. Literally, all I need to do is link it. So I could literally link my model. I could link the assumptions to the model sheet. You see what I'm doing? I'm linking the assumption directly to the model, the income statement. And when I press enter, watch this, I now see it. So I can copy this over. And I can do the same thing with net income. Very simple, right? So of course, as I change my raw material cost, take a look down here, I can see exactly what that's doing. So that's one simple option. Let me show you another great option. Another great option, though, is to use, let me actually write this down. Some people don't like their assumptions up front. They want to see the impact as soon as they change an assumption. That makes sense. So I will tell you that there are 3 ways to deal with this. There are 3 really nice ways to deal with this. One way is to build a summary box on the assumptions tab, just as I showed you. Build a nice summary box directly on the assumption tab. Good. Well, another one is to use Excel's watch window. Use Excel's watch window. This is the second tool I want to show you here. Use Excel's watch window. Where does it live? It lives in the formula window. So I pressed my Alt key, Alt, and I get all these letters lighting up. Alt M. I'm going to go to the formula and then to, you can see watch window here. So it is, let me put a note, formulas watch window, or with the keyboard, it's Alt M and then the letter W. Alt M and then the letter W will open it up because W is over watch window. So let's now go. I want you to see how this works. Look how powerful this is. I'm on the assumption tab and I'm going to go to my formula menu and I will click on W for watch window. And I get this box showing up on my screen. And what I'm going to do is I'm going to say add a watch. I'm going to say add a watch. It says, what do you want to watch? Well, I'm going to go to my model sheet and I'm going to say, let's watch the first 3 years of EBITDA. I just clicked on them and I'm going to press add. Watch this. And I'm going to click add. And here they are. There they are in my box. Let me click another one. I'm going to go back to the model and let's go get 3 years of net income and click add as well. Look at that. Now I've got this beautiful watch window on my screen that's watching 3 years of EBITDA and 3 years of net income. Look how powerful this is, right? Because watch, as soon as I change my raw material to be 250, watch please in my watch window box when I press enter. As soon as I press enter, did you see that? Every one of these numbers changed here and down here. But the point is, I can see the answer at the same time that I change an input. Very important, very, very powerful. And I hope you find this. I hope you use this. I hope you use this tip. How many of you are going to try this? Will you try? Let me know if you're going to try this tool, right? I hope you do. Right? Give me a nod or raise your hand if you're going to use this. I hope you do. Please try this in your Excel files. It's a very, very powerful tool. If you have any questions on it, type them into the chat and we'll get back to you as soon as we can on it. But I really hope you use it because it's an extremely effective tool when building models. Okay. So that allows us to get the best of both worlds. That allows us to do this. It allows us to keep the assumptions up front, but also see what that's doing to the answers. So we're now done tip 3 and 4. I'm going to spend a few minutes on number 5, and then the last 10 minutes of the webinar, I will get into 6 to 10. 6 to 10 are very important, but I can do them very, very quickly. So again, 3 ways to deal with this. As I said, how do you keep your assumptions up front? Build a summary box on the assumption tab or use the watch window, a very, very powerful tool. Excellent. Well, what's the next thing that we want to do in terms of model flow? The next thing that I want in terms of model flow is to build a scenarios page. And I will tell you that this is so important that we built it on its own separate tab. Look at here. I'm on the model. I'm back in the model and I have a separate tab called scenarios. This is so important that we want to build it as its own separate sheet. I'm going to do this very, very quickly, but take a look, watch what I'm going to share with you. I said many models do not have a scenario page, but I would say every model should have this page. I would say to you is one of the most important pages in any model. Every model should have this. It's one of the most important pages in any model. What are we doing? All this page is just more assumptions. That's it. Let's go look at it. All I'm doing is building more assumptions. So I have cost inflation. It's my cost inflation assumptions. It's my sales price assumptions, and it's my sales volume assumptions. But the only difference, right, guys, the only difference with these assumptions is that I have 3 cases. I have a base case, a best case, and a worst case. Let's look at this. So it's just more assumptions, but let me put a note that says, for these assumptions, we have 3 cases. We have a base case, we have a best case, and we have a worst case. Why? Why did I want a base, a best, and a worst case just for these variables? Because these are the key drivers. These are the most important assumptions. Remember, we said earlier that the key drivers are hard to forecast, they're hard to control, and because of that, I want more than one option. I want more than one choice, more than one option. As an example, I told you it's things like prices, commodity prices, exchange rates, inflation. You need to figure out what they are for your company. But these are the key drivers. So in our model, cost inflation we felt was a key driver. Selling price we thought, again, would move around. And same thing with sales volume. That's it. So we have 3 cases. Now, what I want to show you is that there are 3 steps to build this page. There are 3 steps to build up this page. Let's do it very, very quickly and then finish with the last few tips as we end up the webinar. Okay, so let's do this now here very, very quickly. So what are the 3 steps? Well, step number one is to build this box. Do you notice, guys, that every variable has a large rectangle, a large box with 3 rows? One row here says base case, another row says best case, one says worst case, base, best, and worst. That's the first thing you do. Start by building this large box, the large rectangle. Now you'll notice in most cases, these numbers are blue, right? These numbers are typically blue, which means they are your inputs. These are the assumptions. So for cost inflation, you're going to talk to your team, talk to your boss, and you'll say, what should we use? What should we use for the base case assumption? What should we use for best case and worst case for cost inflation? And you literally type them in. Ask your boss, ask your team, do some research, and decide what you want for inflation, for selling prices, for sales volumes. That will be your first step. Now, the second thing that we need to do, I'm going to move this for a second, is we need to have a switch. And the switch is just a numeric value in a cell. Do you see that? I've started off by going to a random cell here, just some cell at the top, and I entered a number 1. I literally typed in the number 1. So you start by entering all your cases. What do you think is the base case? What represents the best and the worst? These are inputs. And then you have a switch. Now, the last thing to do to build this is to have this skinny row. Do you notice that there is a top row, a skinny row? It has a heavy line around it, and it's bold. The numbers are bold. And that's because these numbers are not inputs. You see, it's black. The numbers are black, which means they are formulas. These are formulas. This is the live case. This is the live case running in the model. It requires a formula. And how does it work? Well, whenever there's a 1, watch this, when there's a 1 in the switch, then the live case is actually lifting up the base. The base case is moving up into the top row here. And when I put a 2 in my switch, now look what's happening. The live case is actually lifting up and pulling up the best. The best case is going up into the skinny row. And then finally, when I put a 3 in the switch, now the worst case is lifting up and going into the skinny row. And as I said, this is the row running the model. The actual financial model is using this top row. So as you change the switch, the entire model will change. Okay, very simple, excellent. And a very, very important part of any model. So the question is, how do we build this? How do I build this row? What formula should I use to build this row? Well, many people will build this with an if statement. Has anyone done this before? People will say if. They'll say equals if. They'll say if this switch is equal to a 1, then they get the base. Otherwise, if this cell is equal to a 2, you get the idea. This gets long. This gets nasty. This is not fun. This is called a long nested if statement. You can use an if. You can use an if, but not ideal. It's not ideal to use an if because it gets long. It gets clunky. It's going to get hard to read, nested. So my recommendation is to use one of the simplest but most elegant and most powerful features in Excel, and that is Excel's choose function. And you're going to see it in the formula here. It says equals choose. By the way, in the slides, take a look here with me. In the slides, there are some pages towards the back on modeling skills. And as you go into the modeling skills here at the very back, you will see a page on the choose function here on creating scenarios. So you can take a read of it here as well. But look, it's a really simple feature. It's so simple because look what it does. All the choose function does is it says, where's your switch? Here's the switch. And then where are the choices? The first choice is G14. The second choice is G15. And the third choice is G16. It is super elegant, super simple. The reason I like it is because everyone understands it. Clients will often say, I love that. I love that feature. It's so simple. And how does it work? Well, the order depends on the order that you type in the number. So when there's a number 1, this is the switch. D6 is the switch. When the switch has a 1 in it, the choose will pull out the next item in the list. The order has to do with the order that you type them in. A 1 will pull out the next item in the list. If you put a 2 in the switch, it will pull out the second item within the list because G15 is the second. And if you type in a 3, it will take the third. So the choose function is very elegant and very simple. Other options, though, some people like to use other options. Other options that get a little more complex include Excel's offset function. You can use the index function or other lookups. There are lots and lots of lookup functions. You are welcome to try other ones. That's totally fine. But what I want you to see is that the choose function is very simple, very powerful, and I hope everyone can use it and get very comfortable with it. Now that's one piece of this scenario page, but the last thing is this. You'll notice I did not want to have this number 1 there. I actually have a little drop-down control, a little combo box. Let's look at the model once again on paper. When you show the model to someone on paper like this, they don't see a number 1, 2, 3. What they see is this little, looks like a little drop down, a little control. Why is that? I don't want anyone to see a number 1 here because it doesn't mean anything. It's not clear. It's not obvious. Imagine you just saw a number 1. You wouldn't know why there was a number 1 in this cell. So I want to show you how to build a really beautiful tool called a combo box. Again, in the slides, if you are in the slides, you can see this. There's a page that says incorporating pull-down menus. It says running scenarios here, right? It is in the technical section of the slides. And I'm going to show you how to build a combo box. So watch this very, very quickly. I'll do it very quickly, and then you'll be able to do it on your own. You can follow along also if you have your own spreadsheet open. First of all, if you want to build a drop-down box, you need to have the developer menu. Do you see this? You have to have a developer menu. This is true for a PC or a Mac. You must have the developer menu open. Does anybody not? Does anybody not? Do you not have the developer? Does anyone not have it? If you don't see the developer menu, you need to do this. Watch with me. Do this with me so that you can turn it on. It always starts off, but we need to turn it on. So we go to the File menu. Let me do that again. You're going to go to the File menu, File, and then down to Options. So let's go File Options. And when you go to File Options, you will see something that's called Customize the Ribbon. Okay, Customize the Ribbon. Look where I am. And when you get to Customize Ribbon on the right, you need to put a check mark in Developer. Turn that on. You only ever do it once. And once it's on, it will always stay on. So you go Customize Ribbon, and then you turn on the developer, and then it will stay on. And now you should have a developer menu at the very top, and it will always be there in your Excel. If you're using a Mac, in most Macs, you're going to go to Excel Preferences. Usually there's a menu that says Excel Preferences. It might be Edit Preferences, but usually it says Excel Preferences. And then you're going to look for the option to customize your ribbon and turn on the developer, and everything else is exactly the same. So look what you do. You go to Developer, and then you click Insert. Watch where I am, Developer, and then you click the Insert button. Okay, do you see this? These instructions are also in the slides. So I'm going to click Insert. And when I go to Insert, there are form controls and there are ActiveX controls. We want the form controls. Do you see this at the top? We want form control. We do not want the ActiveX controls because the ActiveX controls need macros. They need VBA. So ignore these. Do not use the ActiveX. We want the form controls. And the one I want is the combo box, the second one from the top left. Look what happens when I click combo box, please, in the top here. When I click on it, my cursor turned into a little plus, a little drawing tool, and I can now draw. Look what I did. I drew a giant combo box. Very simple. You can resize it later. You can make it bigger or smaller later. It just drew it. All I have to do now is go to my drop-down box and click Format Control. And look what happens, guys. When I go to Format Control, it wants to know two things. It wants to know something called the input range and something called the cell link. Watch this. It says, where's the input range and where's the cell link? So input range means where's the words? Where's the range of text? Where is the range of text that you want to see in the drop-down box? Okay. Input range means where is the range of words? And then the second thing it wants to know is where is the cell link? And the cell link means the actual switch. Okay, so again, input range means where are the words you want to see in your drop-down, and the cell link means where's the switch? Here's the switch. It is the number 1, and that's it. And so if you remember those two things, that the input range is all the words and the cell link is the actual numeric switch, you are good to go. Now, of course, watch if I open it up. When you open it up, you can see the words base, best, and worst. If I click on base, it runs the base case. Look, if I click on best case, it now runs the best case. And when I click on worst, it runs the worst case. What's it doing though? Well, the only thing it does is it enters a number in this cell. So when you click on the first option, it puts a 1 in this cell. When you click the second option, best, it puts a 2 in the cell. And when you click on worst, it puts a 3. Very, very simple. And then all I do is I cover it up. You move it, drag it, and cover it up. And now I have a very elegant, beautiful tool, very user-friendly. So let's go back 3 steps to build this page. This was all demoed. For the switch, we recommend the combo box that I showed you that was demoed, but you could also use data validation. If you have questions on it, let me know. I like data validation, but not for this purpose. For this purpose, I prefer to use the combo box that I showed you because it's more obvious. To a reader, it's much more transparent. It's much more obvious to use a combo box instead of the data. Data validation is fine, but it's not obvious to people that a cell is a switch. If you want to try it, let me know. So we've now covered off the first 5. I'm going to spend, all I need is about 10 more minutes to finish off the last 5. So I've got here, number 5 said, build a scenario page. Now let's get into the last 5 very, very quickly, and that will wrap up today's webinar. Tip number 6. Now we're going to get into the actual model sheet. For the last 5 tips, we're going to get into the model sheet and how do you construct and design and build the actual calculations. And we can do this much more quickly. Tip number 6 says that there's really 2 options. You can build financial statements vertically or horizontally. We have a slight bias and a slight recommendation to building financial statements vertically. Let me talk about this here. Scenario page I just talked about in terms of model flow. In terms of our model flow, we talked about the cover, the summary, the assumptions, the scenarios. But in terms of model flow, the next thing then to do is to build all of the schedules and financial statements. Okay, now we're going to build the schedules and the financial statements, and you can build the financial statements horizontally or vertically. And we have a slight bias for doing it vertically because it minimizes errors. We see a lot more errors when people build horizontally, but let me show you what I'm talking about. And at the end of the day, it's your decision. But look at our model. In the Henderson model here, watch this. I have a revenue schedule. Here's the revenue schedule. As I roll down, we now have a cost schedule. So the cost schedule is next. As I go down next, there is the income statement. You see that? Here's the income statement. Underneath my income statement is the cash flow statement. And then underneath the cash flow statement is the balance sheet. This is called a vertical orientation. Now, we have chosen to build a lot of the pieces vertically, all of the schedules vertically on one sheet. Has anyone seen a model? Has anyone ever seen a model where each financial statement was on its own separate sheet? So you had an income statement sheet, an income statement tab, and then a cash flow statement tab, and then a balance sheet tab. Has anyone ever seen that before? It's very, very common. It's not wrong. Let me be very clear. It's not wrong to do that. And on the AFM, on the level 1 AFM exam, you are welcome to build either horizontally or vertically. And I will say, can build horizontally or vertically on the AFM exam. Either option is fine. But what I will tell you is that we sometimes see more errors when people build horizontally. And why is that? And I want to help you minimize error. I want you to get rid of errors and minimize them. Why is that? Well, watch this. What do you know about the financial statements for any company in the world? Well, financial statements always talk to each other. So look at this. On my income statement, it starts with revenue, and the income statement goes down to net income. Okay, great, very easy. Well, what about the cash flow statement? Well, every cash flow statement starts with net income. And look at this. If the cash flow starts with net income, look how easy it is. It's like a waterfall. The net income on the cash flow simply pulls from the income statement above. Very, very simple. And things like depreciation. Where does the depreciation come from? Look how simple. It's just coming from the income statement above. It's really easy, very simple to build and to check your model when you keep it vertical. The cell is in the same column. Look at this. It says equals K94. This one says equals K104. It's in the same sheet. It's in the same column. We're going to minimize errors. What about the cash flow? The cash flow statement ends with ending cash, right? We always finish with ending cash. And where does ending cash go? It goes to the balance sheet. And look at this. Ending the cash line on the balance sheet just links to the ending cash on the cash flow. The entire model becomes effectively a giant waterfall. It's so easy to build. It's so easy to link. And that's why we encourage you to build your financial statements vertically. Again, you don't have to, but if you're going to build horizontally, please double check and make sure all your links are working, because it's much easier to make mistakes when you do a horizontal design. Bad links are one of the #1 errors that people ever make in models. So to avoid bad links, you can often minimize bad links if you keep things linear, vertical, and on the same sheet. So that is tip number 6. Tip number 6 says ideally build vertically to minimize errors. But again, nothing wrong with horizontal. You just have to be super, super careful. Now, regardless of whether you're building vertically or horizontally, let me talk about points 7 and 8 here together. We're just about done. Let me talk about tips 7 and 8 at the same time. Number 7 says, do not do any work on the financial statements. And this is true. This is true if you are building the model horizontally or vertically. It doesn't matter. Tip 7 says, do not do any work on your financial statements. Do your work on schedules. That's one of the critical keys and skills to building an effective model. Watch this. As I go back up to my income statement, look at this. When I look at the revenue line on my income statement, if I click on the revenue line here, there's no formula. I don't have a giant formula here. It's just a link. There's no work on my income statement. It's just a link. I built a schedule and then now I'm linking it in. It's a link, and I can have a tiny calculation. That's okay. Look at cost of sales. It's a link. And then my total costs can be a sum. That's okay. But the message here is do not do any work. If I need depreciation expense, do not do any work on the income statement. It should be linked to a schedule. Obviously, my earnings, that's okay. That's a simple subtraction. My EBT, my earnings, that's okay. My net income, it's a little calculation. That's okay. But the line items themselves should never have big formulas. They're just links. So where is it linking to? Well, let's look at revenue again. Where is this coming from? This is a vertical model. So it's coming from above, K26. Let's go find it. It's linking to K26 as I roll up. It's linking to the bottom of the revenue schedule. I built a schedule and then I link it in. Same thing with cost of goods sold. We built a schedule. It's a schedule, and then I'm simply linking it in. We build it and then we link it. So that was tip 6 and 7, or 7 and 8. Sorry, 7 says do not do any work on your statements. Do all your work on schedules. In fact, it's so important. My two favorite model sayings are this. I've got, yes, I actually do have 2 favorite model sayings that I use all the time. The first one simply says this. My first saying says, build it and then link it. Build it and then link it. What that means is, as I just showed you, build a schedule, then link it in to the statements. Build a schedule and then link it into the statements. It's so important. This tip itself will help save so many errors and allow you to have a powerful, effective financial model. So you build it and then you link it. Then, of course, every line I showed you, where is depreciation coming from? Well, it must be coming from a schedule down below, a depreciation schedule, and you'll find it, K211. We'll go there very quickly. So there was a depreciation schedule. We built it and then we linked it. As part of, if you want to learn how to build a model, as part of the learning materials, the learning resources, we actually walk you through step by step how to build up the various calcs. But for today, I just want you to understand the discipline. That gets me to the last two. Tips here for the webinar. And that says this. It says build very simple formulas. When you're building your calculations, build very simple calculations on your schedules. And how do you build simple formulas? You repeat your data, and then use your data in calculations. And that gets me to my second favorite saying here for models, which is repeat and link. And what that means is repeat every assumption before using in calculations. Repeat every single assumption before using it in a calculation. Let me show you what I'm talking about. Let's go to the revenue schedule. Does everyone see here on the revenue schedule that this company builds revenue by having prices? Look, there's a section for pricing. This is the sales price, and then sales volumes. Do you see that? There's price and then volumes. Well, the actual revenue line, the actual revenue is just price times volume. Very simple. Price times volume. Very easy. Look at that. You can see them. Price times volume. Very simple right there. Price times volume. No big deal. For pricing itself, how does pricing work? For pricing, there's a gross price, there's inflation, and then there's a net price. So the net selling price, my net sales price, is just the gross minus the freight. There's a freight charge. And that's very simple to read because it's all right here on the page, gross minus the freight. But look how we did this. The gross sales price is actually coming from a different sheet. It's coming from the scenario page. The cost inflation has been repeated from the scenario page. Literally all I did is I repeated the sales price. Okay, we linked back. I repeated the sales price from the scenario page. I repeated the cost inflation from the scenario page. That means I'm able to calculate my freight and warehousing charge as the previous year times 1 plus the inflation. Look how simple this is. Previous year times 1 plus inflation. So this is my freight and warehousing charge. It's growing at inflation. I repeated the gross price. So my net price is just gross minus the freight. It's very simple, guys. Look at this. Every single formula is a link, or a tiny calculation. A tiny calculation. Down here, a link, a tiny calculation, a tiny calculation. And as we go down, every single thing is a link or a tiny calculation. And that's the goal. And the way we do that is we repeat all of our assumptions. The last thing I want to show you here, and then we'll wrap it up, is this. Has anyone ever seen a formula that looks something like this? Have you ever seen a formula that was linking to lots of cells on different sheets? Let me make something up here that's really silly. Let me do this. I'm going to take a number on one sheet, divide by a number on another sheet. I'm going to multiply by a number on this sheet, and then add in a number right here. Look what I get. I divided it by 0. That's not very good. So let me get rid of that. Let me divide by, it doesn't matter, something like this, whatever. Okay. Has anybody ever, I'm just making up some nonsense here. Have you ever seen a formula that looks like this? That's linking to a cell on one sheet, another sheet, a third sheet, and then adding in something from a fourth sheet. We never want to do this. We never want to build formulas like this. Very hard to read and to understand, both electronically or on paper. On paper, someone seeing this number on paper is not going to understand. But right, would you agree? If you saw this on paper or on a PDF, you would understand. You could follow along cell by cell on paper. Well, this is a disaster. It's not easy to understand what someone is doing, and people do this all the time. So my point is repeat, and link every single cell. So what would I do in this case? In this case, what we would do is we would insert some rows and we would repeat the variables. So I would repeat the first one. So this is going to be some sort of an assumption, and I just repeated it. And then let's do the second one. So that will be this. So the second one, I will also put in its own cell like that as some sort of an assumption. And then same thing here. I will repeat the third variable like this. That's also going to be an assumption. And the final cell is just a calculation. So now look what I did. I repeated each of the assumption variables. And now let's look what I can do. Instead of my formula looking like this looks like a bunch of garbage. I can say, well, let's take the first one, divide by the second one, multiply by the third one, and then add in the fourth one. And presto, I get exactly the same number. But wouldn't you agree? This is so much easier for someone to follow, to understand. This is going to be your label, whatever this thing is, it doesn't matter. Whatever this is, you're going to label it, describe it, and the formula will make sense. And if you do this, guys, if you do this for every formula, I promise you they will be clear, they will make sense, they will be logical, and you will end up with world-class, best-in-class financial model. So let's wrap up here. I told you that I wanted to share with you 10 of my favorite tips to have really effective, strong models. And I promise you that if you can think about and incorporate all these tips in your models, you will end up with world-class, best-in-class financial models and create tremendous confidence. Think about planning, asking questions, keeping your assumptions up front, making them blue. We talked all about a scenario page, and then we talked about the way to design your statements vertically. Don't do any work on the statements and build really simple schedules. So you've made it to the end. Congrats. That's what the AFM exam, by the way, is all about. On the AFM exam, we expect people to build up a model just like this one, similar detail from scratch. But if you can do that, it's proof to the whole world that you have excellent financial modeling skills. This is a skill set that's becoming more and more important every single day, every single year, to have really powerful, strong modeling skills. So I encourage you to think about it as part of your career. Please feel free to reach out to me, to anyone on our team. If you want to speak, we're happy to help explain or talk about what we're doing and how it all works, and we'd love to welcome you as part of our community. So thank you for being here today. I hope you enjoyed these files. I hope you enjoyed this webinar and this video, and I look forward to seeing you at some other webinars and other videos down the road. Good luck with all of your upcoming modeling, and I look forward to being in touch with some of you. Bye for now.